They say trading is for the rich, for those who can throw thousands into the market and not blink when they lose it. But that's the first lie you're told. Because it's not the size of your capital that determines your success, it's the routine behind it. Most people walk into the markets hoping to flip $100 into a quick $10,000 with luck and adrenaline. But the ones who actually do it, they don't treat their $100 like a lottery ticket. They treat it like a weapon, sharpened, calculated, repeated daily until it becomes deadly. The routine of a profitable trader doesn't start with charts, it starts with behavior. The moment you wake up, your brain is already placing trades of attention, trades of emotion, trades of impulse. The loser opens their phone, scrolls through chaos, and floods their mental space with distraction. The winner, even with just $100 to their name, does the opposite. They create silence. They check themselves before checking the market. You want to build a $1 million trading account starting from scraps? It begins with what you do before the market opens. Wake up. No screen, no Twitter, no Discord. Sit in silence for 3 minutes and listen to the war happening inside your head. Every urge, every doubt, every expectation, kill them. Your first trade is emotional neutrality. If you can't sit still for 5 minutes, you have no business sitting in front of a live market that moves faster than your thoughts. After that, you review one thing and one thing only: your edge. Not your dreams, not your goals, not the influencer who made $90,000 this week. Your edge. What is it? What is the one pattern you've studied enough to recognize instantly in your sleep? If you don't have one, you're gambling. If you do have one, your job is to find it today, and only it. You don't hunt everything. You become the predator of one specific prey. Now you open your trading platform, not to trade, but to rehearse. That's right, rehearse. Most broke traders hit the buy/sell button like a dopamine monkey. Profitable traders, even with $100, treat the charts like a sniper scanning terrain. They don't move until it's perfect. And perfection doesn't mean winning. It means alignment with their edge. At this point, most people are already bleeding capital, chasing setups, caught in trades they never planned for. You haven't clicked anything. You've observed. You've noted. You've reminded yourself, I am not here to trade. I am here to follow my process. Because this $100, it's not a shortcut. It's a training ground. Every trade is either building your future self or destroying him. So your real goal is not to double the 100. It's to build the version of you who deserves to handle 10,000, 100,000, even a million. If that version isn't being shaped today, you're wasting your time. Now the market gives you your setup, your one pattern. It's not ideal, but it's valid. What do most $100 traders do here? They bet too big, thinking, if this hits, I can double my account. Greed, impatience, neediness. That's how they bleed out and blame the market. But the one who wins treats every dollar like it's already part of the million. They risk $1 or $2. They place the trade and detach. Win or lose, they journal, they track, they reflect, and they ask themselves the only question that matters. Did I follow the process? That question becomes your oxygen, because every single millionaire trader you admire didn't scale up by hitting jackpots. They scaled up by stacking repeatable decisions. The $100 account is a magnifying glass. It exposes your weaknesses with nowhere to hide. It's not a barrier, it's a blessing. You will experience the same emotions with $100 as you will with $100,000. Fear of missing out, revenge trading, overconfidence, self-doubt. The market doesn't care how much you're trading with. It cares how you react under pressure. If you can master your mind when the money is small, you've already won. And here's the secret most traders never learn. If you can become dangerous with $100, you can become unstoppable with scale. It's never been about the amount. It's been about your control, your patience, your restraint. So what does this $100 routine actually look like day after day? First, strict risk rules. No more than 1 to 2% per trade. That means $1 or $2 max. People laugh at that. Let them. Because while they're trying to flip accounts and blow up in a week, you're becoming consistent. You're playing long game while they're gambling on coin flips. Second, only one strategy. If you're trading 5 different setups, you're not a trader. You're a child with access to weapons. You pick one edge, one setup, one execution plan. You run it until it's boring. Then you keep running it until it's profitable. Third, limit your trades, 1 or 2 per day. That's it. The real skill isn't entry, it's non-entry. The discipline to do nothing. If your setup doesn't show, you don't trade. That one principle alone will put you ahead of 90% of traders. Fourth, log everything. Not just wins and losses, but your emotions before and after every trade. What were you thinking? What was your expectation? Did you break a rule? Most people trade blind. You're building a self-aware machine. Fifth, reward system. Every week you follow your rules, pay yourself. Not from your trading profits, but from real life. You reinforce discipline, not dopamine hits from lucky trades. This $100 becomes sacred. You protect it like it's your child. You stop thinking about flipping it and start thinking about training through it. Because this routine, repeated for 30, 60, 90 days, doesn't just grow your account, it evolves your identity. You stop being the kind of person who wants to make money trading, and you become the kind of person who does the boring, disciplined, emotionless work of a real professional. Millionaire traders are not built from knowledge. They are built from repetition of restraint. And once your brain understands that money doesn't come from intensity, but from precision, everything changes. That's when the game starts. The moment most traders lose is the moment they make winning emotional. They treat profit like validation and loss like failure. But in reality, both are data. Both are neutral. And your $100 account? It's the most honest feedback loop you'll ever have. Because it doesn't let you lie to yourself. When you're trading with $100, there's no delusion of grandeur. You're not here to impress anyone. There's no Lambo to flex, no overnight riches to screenshot. All you're left with is your routine, your thoughts, and your reactions. And that is exactly what will make you dangerous. Because while everyone else is trying to graduate from their small account as fast as possible, you're doing something they're too impatient to understand. You're installing psychological armor. And one of the first pieces of that armor is emotional detachment from outcome. Every morning you repeat to yourself, "I do not need this trade to work." That sentence disarms your fear. It unclenches your mind. It frees your judgment. The trader who needs the trade to win always loses. The trader who doesn't care wins often. This is where you begin sharpening the psychological blade of detachment. You take the trade because it aligns with your plan. You risk $2. If it fails, it's a cost. If it works, it's a bonus. But either way, your ego is not involved. Your sense of self is not up for review based on a red or green number. Over time, this rewires your brain. It stops associating market action with self-worth. You become clinical, almost cold, and that's where real power begins. Emotional detachment is not apathy, it's control. And control in trading is everything. Now, here's where the routine levels up. Every week, pick 1 hour. Shut everything down. No charts, no price, no indicators. Just you, your journal, and your trades. Go back and review the last 5 days. But don't look at P&L first. Look at behavior. Ask yourself, how many trades did I take that weren't part of my edge? How many times did I break a rule? What emotional pattern kept repeating? What did I say I'd do versus what I actually did? This is the trader's mirror. Most avoid it because it exposes them, but that's the exact reason you must look. Million-dollar traders review themselves like scientists. They don't care how they felt, they care about what they did. Because what you do repeatedly becomes what you are. And in this weekly review, you start to see something profound. You begin noticing patterns in your own thinking. You realize that your biggest losses come not from the market, but from moments of weakness, from tiny cracks in discipline, from those "I'll just try it" trades, from that one time you moved your stop, just a little, from that extra trade after your session was supposed to be over. And then you realize something even more important. Every bad trading habit is a personality leak. Impatience in life becomes revenge trading. Ego in conversation becomes over-leveraging. Neediness in relationships becomes overtrading. And the moment that clicks, you understand this $100 account, it's not just a trading routine. It's a mirror of who you are. So you start working on yourself outside of trading hours. You begin applying the same rules to life. If it's not part of the plan, I don't engage. I only act when I have an edge. I review my performance objectively, without shame. My emotions are not facts. My discipline is. This transformation is what builds millionaires. Not the 8% return, not the green week, but the new internal operating system that starts forming under pressure. And speaking of pressure, here's what no one tells you about trading with $100. You'll feel just as much pressure trading $5 as someone does trading $5,000. Because pressure isn't about money. It's about uncertainty plus ego. The moment you're uncertain and your identity is on the line, pressure explodes. But if you can control that at $5, you'll be unshakable at $50,000. This is why traders with small accounts actually have a secret advantage. They can train emotional resilience with lower consequences. Big accounts amplify every weakness. Small accounts let you fix them before the stakes destroy you. Now let's talk numbers. With $100, you aren't playing for big profits. You're playing for data density. You're learning to execute the same plan again and again with small size. You don't need to make $100 into $1,000 in a week. You need to make 10 $1 risk trades that followed your system to perfection. That's a win. Because you're not building an account, you're building proof of repeatability. And the moment you stack 50 of those, you now have a real foundation. You know what works. You know how you react. You have logs, data, structure. And that is when you deserve to scale, but not a moment before. The lie traders believe is that scaling should come after a few good wins. No, scaling comes after relentless execution of process over time. You can't build a skyscraper on sand. And most people don't build at all. They just stack lucky bricks and pray they don't collapse. Your $100 routine doesn't allow that. It forces you to build slowly, cleanly, intelligently. And that's what makes you lethal when the real money comes. Now let's add one more critical layer to this routine: deliberate boredom. If you're excited to trade every day, something's wrong. Excitement is volatility in disguise. You need to fall in love with boredom, with watching the same setup over and over, with waiting, with skipping days, with planning the trade and walking away. Because here's the truth. The market isn't a movie, it's a mirror. And if you're constantly chasing highs, it will crush you. The most successful traders aren't emotionally addicted to trading. They're emotionally addicted to clarity. And clarity is found in repetition, in control, in stillness. So every day, as part of your $100 routine, ask yourself this one question: did I stay boring today? If the answer is yes, you're winning. Because boring is scalable. Emotional isn't. One last rule: don't talk about your progress publicly. Don't post your trades. Don't flex your wins. Don't seek validation. Not because humility is noble, but because attention is distraction. Your energy belongs to your execution, not to applause. Keep your $100 account private. Let it become your temple. Let the routine become sacred. Let it train you in a way no guru ever could. Because once you've mastered control at this level, once you've built this routine into your nervous system, once you've seen the market without needing it to make you feel something, you're not just a better trader, you're becoming unstoppable. The moment you realize that trading is not about reacting, but about waiting, you cross an invisible threshold. You become dangerous, not because you're fast, but because you're patient. And patience is a superpower very few traders ever master. You're still working with a $100 account, but now your routine has created something the average trader will never touch: predictability. You wake up and already know how you'll behave. Not how the market will move, but how you will respond to whatever it does. That's what makes you powerful. Not control over price, but control over self. Let's break it down further. Your goal now isn't to just follow your process. Your goal is to refine it. That means tightening your entries, sharpening your exits, and analyzing not only what went right, but what could have been better, even on wins. Because this is where traders get lazy. They think winning trades don't need reviewing. They're wrong. Winning trades are just as dangerous as losing ones, especially if the win came from breaking rules or getting lucky. A profitable mistake is still a mistake. And in trading, uncorrected mistakes compound faster than capital. So in this phase of your $100 routine, you become obsessed with trade quality. Not outcome, not P&L, not the dollar gain. Only one thing matters. Did I execute this trade exactly how I planned it? That's the question that separates the $100 trader stuck in a cycle from the $100 trader turning into a weapon. Here's a brutal truth most won't tell you. You can lose money on a perfect trade and still be elite. You can make money on a sloppy trade and still be trash. And when you finally understand that, the market starts making sense in ways most people never experience. Now let's talk about trade selection. You're still working from your one edge, one pattern, one plan. But now you begin seeing setups that almost meet your criteria. And here's where most traders blow it. They justify. They bend their rules just a little. They say, it's not perfect, but it's close. They trade it anyway. They lose. They log it. They say they'll never do it again. Then repeat the same mistake next week. This is where your routine separates you, because your new rule becomes, if it's not a hell yes, it's a hell no. Your setup must be clean, clear, obvious, not just on the chart, but in your gut. You don't place trades with hesitation. You place them with conviction. And if that conviction is missing, you stay flat. Flat is a position. Flat is power. Flat is discipline in action. Most traders are addicted to being in a trade. You're addicted to being in control. That control shows up everywhere now. You no longer chase alerts. You don't jump on Discord pumps. You don't trade out of boredom. You don't listen to opinions, because your routine has eliminated the need for noise. You've become self-contained. And this is where something magical happens. You begin to notice how much noise you used to rely on just to feel confident. You realize how addicted you were to outside validation, to someone else's opinion, to that one YouTuber's voice telling you it was a good trade. But now, you sit in silence. You wait for your pattern. You execute. You review. You adjust. This is how killers are made. Not with excitement, not with drama, not with dopamine, but with quiet precision. The $100 account is now just your battlefield. You're not here to make money from it.
You're here to make sense of yourself inside it. Let's introduce another key part of the routine now: deliberate market abstinence. That means every week you pick one day where you do not trade, no matter what the market shows you, even if your perfect setup appears. Why? Because this practice teaches you the art of non-reactivity. It builds resistance to temptation. It proves that your edge is yours, not something that disappears if skipped. You don't need every setup. You need the right mindset when you take one. This non-trading day reinforces a psychological truth. You don't trade for action. You trade for execution. It sounds counterintuitive, but it works. Because now, every other day you do trade, you're sharper, more focused, more grateful, less compulsive. The winners are those who can sit on their hands longer than others. That's the rule. Now, let's talk losses. You will have red days, and they will hurt. Not because of the money, but because you'll feel like you betrayed yourself. You'll say things like, "I knew I shouldn't have entered that," or "I moved my stop again," or "I chased it, I knew it." Good. Let that sting. But then ask, why did I do it? Don't hide from the answer. Journal it. Call yourself out. Because I was bored. Because I didn't want to miss it. Because I wanted revenge for the last one. Because I wanted to feel something. This level of honesty, it builds power. Every time you face your own failure and you analyze it instead of running from it, you become more dangerous. Because the trader who can't self-reflect is doomed to repeat. But the trader who stares their mistake in the face with calm awareness is evolving in real time. You will start noticing something else now. The gains, when they come, feel smaller than they should. You made $4, then $7, then $11, and your brain says, "That's it?" This is the fork in the road. The amateur thinks, "I need to size up." The pro thinks, "I need to repeat this 500 more times with flawless execution, then I size up." The goal isn't to feel rich. The goal is to feel confident in your process. And the only path to that confidence is repetition. Your $100 account, by this point, is your dojo, your test ground, your reflection. The world still sees it as small, but you don't. Because now, it's not about the money. It's about the identity that has been forged through it. You don't fumble over price spikes. You don't panic when red candles show up. You don't react. You execute. Because you are no longer just someone trying to trade. You are becoming a system, disciplined, consistent, cold, and soon, very soon, dangerous. By now, you've stopped seeing the $100 account as a limitation. You've begun seeing it as leverage. Not financial leverage, but psychological leverage. It has exposed every emotional flaw, every reaction you couldn't control, every moment where your need to make something happen overtook your ability to just let things be. And if you've made it this far, you've already become something most traders never will: intentional. Now your trades aren't guesses, they're decisions. Your waiting isn't passive, it's tactical. Your silence isn't hesitation, it's calculated patience. You've separated yourself from the crowd. But now it's time to do what most never even think about doing: building your future capital from your current discipline. Here's what that means. The $100 account is no longer your finish line. It's your lab. And while you're mastering your behavior with it, you're preparing your real capital outside the market. Not through gambling, not through flipping it, but through real-life income.
You begin treating every dollar earned in your real life as potential ammunition to be deployed with precision once you're ready. Most people try to scale up before they've built the internal system. That's why they lose. They get funded too early, they get confidence too soon. They trade size they're not ready for, and the market punishes them brutally. You won't. Because while others chase profits, you're chasing control. And when you have control, size becomes irrelevant. Size is just a multiplier for precision. If the action is sloppy, scaling just makes it worse. So while your routine continues, one setup, one execution, one journal, you begin building something else, your capital staging plan. This is where you break the myth that you need to turn $100 into $10,000. You don't. What you need is to use $100 to build certainty. Then you take your growing income, whether it's from a job, freelance, side hustle, and begin staging your future trading bankroll. But you don't touch it yet. Not until your logs prove consistency. Not until your routine is boring. Not until the act of skipping a trade feels more satisfying than taking one. Once you reach that point, you're not a beginner anymore. You're not learning, you're executing. Let's talk about scaling now, because this is where most traders collapse. Scaling is not a jump. It's not going from $1 to $10 risk per trade in a week. Scaling is a ceremony, a psychological evolution, a deliberate promotion you earn, not take. You only scale when your win rate holds steady across 50-plus trades, your drawdowns are controlled and recovered without panic, you've stopped needing to prove anything to yourself. The process is so natural you forget to hope for wins. Once this is true, your new routine begins. Risk moves from $1 to $2 per trade to $3 to $5. That's it. You don't double, you don't sprint. You expand your zone of control slowly. You observe how your emotions respond. You track your behavior again, because here's the truth. Scaling is not financial, it's psychological. Most traders don't fail because they don't know what to do. They fail because they don't know who they become when they size up. That shift in size cracks their discipline. They begin holding trades longer, moving stops, overtrading. It exposes the gaps they thought were already patched. So you scale in layers, and the moment you feel the pressure creep back in, you drop size again. No ego, no shame, only precision. Because your job isn't to trade with pride, it's to trade with clarity. Now your routine includes more than execution. It includes pre-trade visualization, walking through trades in your mind before you ever place them, microjournaling, capturing emotional shifts during trades, bias audits, checking if your opinion is clouding your plan, setback protocols, knowing what to do after a loss before it happens. This isn't hobby level anymore. This is operator level. You're treating yourself like a mental athlete. You have routines to control emotion, to lock in discipline, to eliminate variance. And you start thinking like a fund, even if you still trade $5 at a time. Because the trader who thinks like a fund manager while using $5 risk becomes a $5,000 a day operator when the capital finally catches up. That's the goal. And that's what 99% will never understand. They scale emotionally, you tactically. They chase results, you build the system. They want to feel powerful, you want to be unshakable. Now here's something else to understand as you reach this level. Time is no longer your enemy. In the beginning, every trader is obsessed with how fast they can grow. But now you know, speed means nothing if your foundation is shaky. And you've realized that taking longer to win the game guarantees you get to keep winning it once you do. You've traded urgency for precision, and that exchange made you lethal. So now your routine becomes simpler, but heavier in impact. You don't second guess, you don't rush, you don't skip reviews. And you don't apologize to yourself for trading small, because you know that small done right beats big done recklessly, every time. You've also noticed that your relationship with the market has changed. You no longer look at it as a jungle to survive. You see it as a mirror, a scoreboard, a dojo. Every candle is a test.
Every setup is an opportunity to prove that you've outgrown the noise. And slowly, without realizing it, you've become something terrifying to the market, not because of how much you're trading, but because of how little emotion you bring to the table. You don't need revenge trades. You don't need external hype. You don't need to be right. You've become a weapon. And your $100 account? It was just the forge.